What is a financial advisor? Are these just people, annoying people in some cases, that are just spamming your LinkedIn, your email, or even calling you up? Or are they worth speaking to? In this video, I'm going to break it down for you. Ultimately, a financial advisor is a professional who helps individuals and businesses manage their finances and make informed decisions about money. Their role is to guide clients towards achieving their goals, such as saving for retirement, investing, buying property, managing debt, or really just kind of any situation, insurance, kind of life goals that one may need assistance. So I'm going to break down the services that financial advisors provide and take you through them one by one. So I guess first and foremost, the key services, or the key service I would say, would be financial planning. This would be budget and cash flow analysis, retirement planning, education planning if you have kids, and also estate and legacy planning if you are looking for assistance with, passing assets on to your kids or to your grandkids. And then number two, I would say, investment advice, and that would be helping you create a portfolio and managing that portfolio on your behalf. It would also help you do a risk assessment and make sure that you are in assets that are in line with your risk profile. And when they have that information, they're going to be in a position to choose suitable funds, stocks, or even alternative investments. That alternative investments can be things like, wine, whiskey, art, classic cars, watches, whatever it may be, whatever flicks your switch and is in line with what you're looking to achieve financially. And then you'll get into areas more like tax planning. God, tax planning, not exactly the most exciting thing to talk about, however, vitally important. And what the financial advisor can do is help you with strategies to reduce your liability, legally, of course, and also give you advice on tax efficient investment structures, whether that might be life insurance or any number of other options that are out there. It depends on, there's quite a few variables, whether that's whatever country or whatever country you're living in or whatever country you are from, it will differ. So it's really important to get proper advice related to your own specific needs. And then you have insurance and risk management. So that would be recommending health insurance, life insurance, income protection, key person insurance if you are a business owner and the business solely depends on you. And also ensuring that you have financial security against any unforeseen events. You never know what life can throw at you, so it's always important to make sure that you have adequate protection in place. And then, in my humble opinion, it would be like debt management is right up there. That's advice on reducing high interest debt, something you want to avoid unless it makes sense. There's a big difference between good debt and bad debt. Good debt would be buying a property where, the rental income covers your mortgage and all of the associated costs and can even provide you with an income. Whereas bad debt would be falling head over heels in love and going and buying your newfound love a nice handbag or watch on a high interest credit card. So yeah, there you go. And also, it's another key aspect of like debt management, just going back to the property example I made, is a financial advisor can also help you structure loans or mortgages much more effectively, And then what I would say would be wealth preservation and growth. That is, helping you grow and protect your wealth over time. And often that would include, integrational wealth transfer planning, which is a very fancy word for estate planning. And yeah, so there are different types of financial advisors as well. And going into that in a bit more detail, you've got independent versus tied. So an independent advisor is one that can take a whole of market approach. It means that they can go out there and source the best solution for your individual needs. Whereas a tied advisor would be one that is tied to a specific, set of products. Like, for example, I used to work for a large UK bank, and when I worked for that bank, I would only be able to recommend that bank's products. So, if they wanted a mortgage, it would be a mortgage from that bank, insurance, etc., etc. And, the UK is a very tightly regulated market. If we did not have a solution that suited the client's needs, then, out of professional integrity and also courtesy, and also to do the best by the client, you would refer them to an independent. And then you have to look into how the financial advisor is paid. Are they fee-based or are they a commission-based advisor? Because that makes a big difference. And, fee-based means that they will usually just have a fee on the assets that they have under management on behalf of their client, whereas commission is based on, whatever product they sell. And a lot of advisors will have both. For example, they may manage a client's assets and then they'll go out there, source health insurance or life insurance or a mortgage, and the likelihood is that they would receive a commission for doing so. So that pretty much sums up my video for, what is a financial advisor. And it's also important to make sure that if you are looking for a financial advisor, that they have, credentials and are accredited professionals. That can be like a CFP, a CFA, or a CPA, depending where you're based and where you're from. So, yep, that's it for today. Expat Money Chat. If you found this useful, hit the follow, hit the subscribe. Any questions, you could drop us an email at info@expatmoneychat. Thank you for watching.